Good evening. Welcome to the ShadowTrader video weekly for Sunday, March 31st, 2013. Apologies if you hear any background noise in this video. I'm recording this one on the road, and it's my only chance to get this video together for you guys right here. So apologies if you hear a little bit of background noise. S&P channel is still intact here. Was a shortened trading week this week. Excuse me. Only 4 days, culminating in Thursday's action, which was a breakout. We finally now have a close over the prior close in the S&P, which was 1565.15. So it's a new record closing high. If you go out to the monthly chart, we can see here that the all-time high, however, is a little bit higher, which is 1576. Seems like the market's going to go there at this point. I mean, we're so close. If we go back to the daily, you can see here I've pulled the channel down here. The channel target is now around 1587. If you recall, this was starting around like 1530, 1540. We've been talking about this for so long, and the market just, keeps going in one direction. It just won't stop. So that channel resistance keeps moving up. If we look at the Dow, I've left the same channel on it. The Dow is still extremely overbought to me. You can see how it's hugging the upper part of the channel here, and it's just not backing off at all. I mean, at some point there's going to be some liquidation, some corrective activity. I would say at least to the middle of the channel on the Dow. The Dow hasn't really even visited the middle of the channel in a while. Came in just once here in February, and since then it's been really, really strong. NASDAQ Composite, same thing, right? We've broke out of some consolidation over the last few days, and we are now basically just hugging the the upside of the channel. So things continue to be pretty strong here. I was reading an interesting article the other day about inflation and deflation and things like that, and it brought up some points that I thought were interesting that I wanted to share. One thing that the gentleman was saying was that if you don't think there's inflation really happening yet, then just you need to look no further than the stock market. And the thinking was that with the type of things that the government is doing now in the Fed, the inflation starts in equities, and then it goes into commodities, and then it'll creep into everything else. And I thought this had a lot of merit to it, because that's exactly what's happening, with equities here. I mean, they just keep going up, up, up. They're not quitting. So there's definitely inflation going on in equities, but we don't see it anywhere else. But for instance, like if we look at crude oil, for instance, right? I think that people are not really noticing that crude is, relatively close to 100 a barrel. I don't have futures on this platform right here, but you're looking at USO, and you can clearly see this is kind of a cup forming here, and I think that you're going to see higher prices there. You're certainly not seeing it yet in the metals at all. I mean, gold continues to just kind of bounce around and be weak. However, I am keeping a close eye on long-term downtrend lines in the metals, and if any of those get broken, then I may be looking for a play to the upside. But for now, I would have to say, trend is intact. We're getting very, very small liquidation breaks intraday. If you look at like a 15-minute S&P, I'll take a second to switch here. There we go. You can see we get liquidation breaks, but they're just constantly bought up. And little by little, this is strengthening the market, more or less. I mean, what it's doing is it's keeping the market strong enough, basically, to keep going, because if there was absolutely no pullbacks, then the market would just completely crash. But it is getting some liquidation as it's going. But even so, that being said, if you look at what's going on under the hood in the profile, the structure is really not strong. This has been typical of this entire rally. The structure has been just relatively poor. We're seeing things like, for instance, during the course of this week, you had March 26th here. Notice that the fairest price to do business remained down here, and yet you closed up here. So you weren't able to build value higher. The next day you had value overlapping. Point of control did move up. You had a 3-day balance here, and then finally, you broke out of the balance. So going forward in the next week, the key is going to be: are we going to be able to hold inside of this balance area, or come back down into this balance area here? One of the things that I've been looking for quite a while, and it's not very pronounced here, but is the concept of excess to the upside. And you can see here we did get a little bit of excess to the upside in Thursday's profile. It's not a meaningful excess. There's only about 4 TPOs here in the end period, but it is a little bit of excess to the upside. So whether or not that means that the up auction will be over temporarily or not, we'll be watching that in the coming week. In the coming week, like I said, the key is that if the market's going to go higher, it really needs to find acceptance, I think, here inside of Thursday's value, and not lower here into this bracketed area where you had the 2-day balance. All right. Ideas for next week. Here's the stuff I'm looking at as far as trades. I've got a ratio spread on Google on right now, which I sent a tweet on Thursday, was trading for about 42 cents or so. What I have here is a 775, 760, 1x2, and I like that. I wanted to point out to everybody this trend line support is here. Google seems to be coming down slowly. I think it's going to be, if anything, close to perfect in terms of coming down into the support level. I like the 50-period moving average here is just below us, plus I just drew this line here to show that there's prior highs here supporting the stock right around 772. So my play here going into next week is on weekly options, and like I said, it's 1x2, being long 1 unit of the 775s and short 2 units of the 760s right there under the at the support point, right? Amazon is another one that I think could be in play this week. If you look at the daily, it's just creeping back up to this area here. I may do something with options in the same vein, like a 270, 275, but price is really actually rather close here, and I like the ratio spreads to be a little bit wider. So what I'll probably just be watching for is see how does price act here around the 275. I think that what's going to happen to Amazon is that it's going to come up into this area, and the pullback after that is going to be either very shallow or non-existent. In that case, I'll be looking to sell some puts probably and use those puts to finance some sort of a vertical spread or some sort of long positive delta between this 275 and 285 resistance. I may even be looking at like a 280 285 ratio spread. But anyway, my analysis on Amazon is going to be centering around this 275 level this week and see how it acts. Apple, I figured it's important to show it continues to be weak here, and I don't exactly know how I'm going to play this one this week, but my initial thought process on Apple is that I don't think it's going to take out the 420 just because of the way I'm seeing the pattern play out here. You can see here that the support here is relatively strong coming down into this area, and then you've had the bounce, and you did break the downtrend, which I don't have drawn in, but obviously, if you put it like this, you can see we broke it, put it right in there. We broke, went over the 50, we failed, now we're at the 20. I think worst case scenario, Apple's going to have kind of a sideways week. One thing that I am noting about it is the fact that you can clearly see over the last 3 days here, straight down, 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 yet the market doesn't look like that, right? We definitely had strength in the market, closing at a new all-time closing high in the S&P, and yet Apple's backing off. So my outlook on it here is kind of neutral to bearish, and I may do something on the put side, maybe ratio spread, I'm not sure yet, using this 420 area as a possible support. But that's really going to be the key to see how the stock acts if it goes through there. It may be a double bottom, so that's something also to look at. I would probably play that for a day trade and maybe hold some shares for a longer term bounce on a retest, because that is common. The stocks do that. Excuse me, where you'll break trend. Everybody thinks that, okay, that's it, the downdraft is over, and then it'll come down, but really all it's doing is a retest. So that's another idea for this week. So focus is going to be really, in terms of weekly plays for the week, is going to be on those 3 stocks. All right, that's pretty much it. That's all I've got for this week. Just to recap, the S&Ps are still chugging higher, and like I said, keep an eye on the channel resistance. I do believe that there's going to be a really good short to be had up at that area. Again, currently it's at 1585. It keeps moving up. I am not confident at all, I should say, initiating any type of shorts in this market unless I'm up against the top side of the channel. You can see, whenever we get there, even though the market crawls higher, you do get some relief. You get a back off here. Here we tried to retest the channel, failed, dropped off pretty hard. Here we came just short. So I'm going to be watching that area this week. And if we get up there, then I would initiate a short play. All right. That's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.